Hey, welcome back to the video. And in this one I'm going to be showing you how to identify points where you should enter trades after doing proper analysis. But before we get to the video, check the link in the description for the full course and get 50% off if you use the top link. And to begin, you should know that the points that I'm referring to are the 20, the 50, and the 80. These are the 3 points in which you should enter a trade. And if you're wondering why did I choose these points to enter a trade, well, that's because these are the points that banks, big banks or hedge funds use in order to place their trades. These are the points. And we also call them double zeros. See? Double zeros. But in order to take these trades, what I normally do is, if you're not able to get an exact trade on your 20, 50, or 80 level, if you're not able to get a trade on these levels, you can take a trade once it's 15 pips above these levels. So in this case here we have the 20, 15 pips above the 20 is 35. In this other case here we have the 50, 15 pips above the 50 is 65, and 15 pips above the 80 is 95. So within this range right here, 20 to 35, 50 to 65, and 80 to 95, you're allowed to take trades. So let's say price is coming down and it doesn't exactly get to your 20 level and just bounce, ranges between this level right here, this zone. You're allowed to take a trade anywhere along here for a buy to go up. So let's say price is coming up. The same thing applies, where you're allowed to take a trade anywhere along this zone for a sell. And the same thing applies to the 50. And the same thing applies to the 80. So make sure to look out for these zones. When you're looking for trades, try and get a trade in these. And if you're not able to get a trade in these zones, that means that it's not a good trade to take in the first place. So always try your best to trade in these zones. And that brings us to the end of this video. It's a very short video, but I hope you understand. Well, before I end the video, let's see if we can find an example. Let's see if we can find an example right here. We're on, let's switch to a lot of time frame, switch to the daily time frame. We're on Euro USD. So let's say we're looking for a trade. Let's say we're looking for a trade. And since price is coming down, let's say we draw a fib. This doesn't have anything to do with the strategy that I use. I'm just giving an example. So let's say, since price is going down, we draw a fib from the high all the way down to the low of the impulse move, and we're waiting for price to bounce off of one of these levels. And let's say we're looking, since price has a support area right here, that means we're going to be looking for price to come up near the 0.5 zone to bounce off for a sell. So the first thing we need to do, once we're looking at that zone, is look for a 20, a 50, or an 80 zone that is near it. And in this case now, we have a 50 zone right below. As you can see, we have a 50 zone right along the 0.5 on the Fibonacci. So, okay, let's draw the box at the zone. So let's say let's draw the box right here. Let's say it's 50. And 65. So this is the zone right here. So now, once we're waiting for price to come back up to this area up here, we set a sell limit right at the 50. Since it's the bottom of the zone, set a sell limit right at the 50 with a stop loss either at the 0.786 on the Fibonacci, or we can put it, since it's all the way down here, we can put it at right above the 0.618 on the Fibonacci. And our take profit would be on the negative 0.272 on the Fibonacci. And right there we have a trade. Almost no drawdown, just a little bit. The price didn't come anywhere near our stop loss. And we have a trade of a 1 to 6 risk to reward ratio. As simple as that. As simple as that. Right there. So now you know how we use these levels or zones, and you should incorporate them in your trading as well. And before I end off the video, I almost forgot to mention that this also applies the opposite way. So instead of 15 pips above the 20, 50, and 80, we also look for trades 15 pips below the 20, 50, and 80. Just like this. So the example that I just gave, you just notice I made a mistake. The example that I just gave, where was it here? Yeah, it was here. Where I drew the fib up, then waited for price to come up, and I drew the box, and I set the coordinates to 50 and 65. It was supposed to be 50 at the top and 35 at the bottom. So it's actually supposed to be like this. But you could have still had your entry at the 50. So it's the same stop loss, same take profit, everything. Just drew the box a bit wrong. Okay, so now that brings us to the end. I'm out.